Welcome to episode 76, and today I want to talk about why 10K is that mythical figure that you all need to get to before your results really start to take off. Last week we spoke about compounding, and this episode is somewhat of a real-life case study of how momentum works, since this is the figure I got to before my results started to take off. And when you start trading, it's almost a certainty that the overwhelming majority of people are going to lose money initially. It doesn't matter how much you theorize or read or are guided into what to do, because nothing teaches you how to handle losses better than actually experiencing them. And when you do experience them, they're uncomfortable and unsettling. After all, working hard just to lose money seems counterintuitive, and it leads to all sorts of false assumptions, which in turn lead to incorrect thought processes as to how to make it back. So it takes experience and a lot of trial and error in order to figure out a system that's going to prevent your bankroll from fluctuating wildly so that it doesn't disrupt your mental bandwidth. You'll never be able to grow your financial capital if that's the case. So that is the first hurdle when it comes to trading. And when you finally do make that crossover into profitability, that's when the real challenges begin. So the struggle before 10K. I often get asked how much you need in order to start trading. Now this question is a bit like asking someone at the gym what weight the dumbbells should be for you to lift. Now I completely understand why someone would ask. After all, it needs to promise to be worthwhile if someone is to give up their day job. But the reality is, if you've never traded, you won't have the skill to make profit with any amount of money. So you might as well start small and lose small. And this first point is why starting out is so difficult. If you have a small bankroll of say £1,000 and you have a good bankroll management and you're risking 2% and you have an average winning ROI of 25%, that's £5 profit. It's a monetary amount that's so insignificant it feels almost pointless. You would have to trade 100 markets a month perfectly just to make £500. Now, since nothing is perfect, let's assume you're right 80% of the time and your average loss is around half your stake. Well, now 100 markets will yield only £200. So you'll have to trade 250 markets just to make 500. And that is such a long grind for such little return. You're trading from a lack of abundance, so you have no options. You can't afford to take unnecessary risks without the risk of wiping out, say, a week's work. You have no cushion to fall back on, and you can't afford to miss opportunities. And it's that emotional toll, that constant temptation to overstake or do something stupid that you'll always be at odds with. People who leave their job to trade are quickly trying to match what they made in their old line of work. Or those with financial commitments who can't afford to not make a profit are always facing that temptation to withdraw. Trading is hard enough, but when you're constantly bombarded with that emotional turmoil, where things outside trading are pulling your mental state in different directions, the challenge just becomes that much harder. And when it comes to the actual trading, the longer you trade and the more markets you're involved with, the more likely you are to stumble on a unicorn opportunity where you'll find a price that's at such ridiculous value, you'll be tempted to lump everything on it. There's nothing more painful than spotting a good value play and not maximizing your return. But beginners nearly always measure returns in absolute monetary terms. And it's this error in thought process early which causes so many people to wipe themselves out so soon. The success of a trade should be measured in percentage terms, not absolute terms. If you have £1,000 and you stick it all on a horse at evens and you win and double your money, well, congratulations. What should have taken 2 months to achieve, you've gone and done in 5 minutes. But the reality of what you've just done is you've just initiated the early stages of a destructive habit which is going to come back to bite you and send all your months of slow, disciplined grinding right back to zero. And the beginner that falls into this trap finds it so hard to get out of, because without realizing it, their goal has switched from financial well-being to chasing dopamine hits. Your returns should always be in line with the risk that you can afford to take. And look, I'm guilty of making these mistakes. I don't sit here from a place of someone who had it all figured out in the beginning. I messed up plenty of times, and that's why I share these lessons on these videos so you don't make the same mistake. In the last episode, I recalled an incident where I stuck my whole bankroll on Floyd Mayweather to beat Conor McGregor. It was one of the surest mispriced markets I'd ever seen. And whilst staking aggressively was justifiable, no risk is worth your entire net worth. But bear in mind, my trading was still in its infancy at the time, and I'm pretty sure I got wiped out soon after. In fact, I've been wiped out several times, a couple of times before I even reached, before I was close to 10K actually. It happened because I cheated. I was taking shortcuts and overstaking, and what starts out as a one-off thing nearly always develops into a bad habit. So whilst I fully believe that you should milk a good hand and you should bet a little bit more aggressively when the occasion calls for it, reckless risk management always catches up, and the sting of big losses creates scar tissue, which most traders just can't get past. In fact, the bad habits that I developed is what held me back for the first 3 years of my trading. I think I once shared on Twitter a screenshot of my first 3 years profit where I just couldn't budge past that 10K mark at the end of the year, all because I was crippled by bad habits that I left unchecked. So I had to pretty much reinvent myself after 3 years. I can't stress the importance enough of starting correctly. If you get the fundamentals right, if you can grind out the small staking and be satisfied with those incremental increases week on week, whilst never withdrawing and never letting your outside financial situation feed into your betting, those habits will serve as a foundation for you to reap far bigger rewards later on. So the lesson here is to just never needlessly interrupt the process of compounding, especially early on when the curve is at its flattest. The breakthrough and why 10K matters. So getting to 10K, at least for me, was a massive psychological barrier, namely because it was the first time my account reached 5 figures. And for me, it was an even bigger deal since, like I said, I got within touching distance so many times before I blew up. If you manage to survive the 1,000 to 10,000 pound grind without cheating and without getting away with bad trading, then your discipline and your habits are likely robust enough to take you as far as you want to go. If you followed the cookie cutter template which I laid out, where you're risking 2% and you're averaging a 10% return and trading 250 markets a month, then you'll make £500 in your first month. But if you stick with that same protocol, you'll be at 10K within 6 months. Now, obviously, that's assuming you're not over trading or overstaking and blowing up and not withdrawing. Our results are almost guaranteed to be impacted by a human error to some extent. But whether it takes 6 months or even 12 months, that is not a long time at the School of Hard Knocks in order for you to get to 5 figures, which, in my opinion, is where the real fun begins. 2% or £200 for a 10% return multiple times daily suddenly seems worthwhile. When you're grinding on small stakes, you're playing more of a volume game than a strategy game. It's not worth your time waiting for hours or days even for a position to unfold. You can't afford to watch, say, an entire innings of cricket in order to make £5 or £10 profit. The liquidity is sufficient enough for you to scalp that out in 5 minutes or so pre-match or during the half-time break. You'll likely have to rely on a lot of short-term strategies like scalping, for example. You'll need to be rinsing and repeating your stakes over and over again and just leveraging your bankroll as much as possible in order to rack up those small wins as quickly as possible. You can't afford to take days off and you can't afford to miss opportunities. You're essentially trading out of desperation or necessity, and it's exhausting and it's not sustainable at a higher level. But after 10K, that's when you begin to cross that threshold from survival to strategy. You no longer need to play a volume game. You can trade less markets and start to cherry pick your entries more carefully. You can afford to roll the dice and play a more attacking game in order to collect bigger profits or a higher ROI by staying in a trade longer or just taking a longer term view. You can even trade multiple markets at the same time. When I used to trade the Cheltenham Festival, where the liquidity is astronomically higher than the average race meeting, my bank was so small I could only afford to scalp one race at a time whilst, say, millions was getting matched on the feature race. I had to wait till the most immediate race had concluded before I could move on to the next one. And the closer you get to the off, whilst liquidity may pick up, the sharp money arrives. When my bankroll got past 10K, I could afford to fire up multiple races or multiple markets at the same time and manage sometimes up to half a dozen positions. Sometimes I'd have positions running long term, like an outright winner market, while I'm doing my daily trading. Now, I typically trade racing and cricket on a day-to-day basis. But if I spot early value in, say, a boxing match or the Premier League outright winner or a golf tournament, I have the bankroll to flutter with a few units that are worthwhile enough to let the position run and materialize potentially months ahead of time without impacting my ability to trade immediately. The ability to do that, the ability to deploy more money when you're coming from a place of abundance, essentially means that you now have the ammunition to take advantage of multiple opportunities at the same time. You can take more risk. It takes money to make money. And these are just luxuries you don't have when your bankroll is so small. When you start small, aspiring traders make the mistake of trying to earn an income straight away. Now, whilst that's the ultimate goal, you have to break that down into more immediate goals. If you're looking to the top of the mountain and you're not process orientated in the moment and you're taking shortcuts to get there, It's just inevitable before you blow up or give up. It's just too far away. Your goal at the start is just to build habits that are going to serve you later on. When you get to 10K, assuming you've built robust habits, that's when your focus shifts, because now you feel like you have momentum and money and freedom, so you can focus more on strategy and execution, making money and just taking advantage of several opportunities simultaneously. The exponential growth. So assuming you continue to lay every brick perfectly and follow the same risk management protocol, beyond 10K is when the curve starts to steepen exponentially. Given it took less than 6 months to go from 1 to 10,000, assuming the same ROI, same risk and trading 250 markets, it takes less than 2 months to get from 10K to 20K. From 20K to 30K takes a month, and from 90 to 100K is only going to take a matter of days. Now again, this is making a lot of simplified assumptions with regards to markets traded, human error, not withdrawing, and of course the Betfair fees. But the point I'm trying to illustrate is that without even improving your ROI, without even becoming a better trader, the same percentage return equates to an exponentially higher amount of money in real terms in a fraction of the time. And that's the magic. The magic of compounding means that you begin to annihilate time. The curve which once looked so flat in the beginning, the long grind which yielded such small returns for such hard work, now require only a fraction of the effort as the curve begins to steepen. The Greek philosopher Archimedes said, "Give me a lever long enough and a place to stand and I will move the earth." Archimedes was a physicist and mathematician, and the statement highlights the mechanical advantage of when a lever is long enough and positioned correctly that you can move massive amounts of weight without brute force. And it's the same laws that apply to money. Your money is the lever, and the more you have, the less force needs to be applied to achieve the same results. Hence why it takes an exponentially shorter amount of time to earn 10K with a 100K bank as opposed to a 1K bank. I see so many traders making the mistake of investing so much time into uncovering new angles and trying to squeeze out every last few percent of ROI. They deploy all kinds of sophisticated methods which take up so much effort that the analysis ends up becoming the hobby or the passion. Now, some people can make this work. Some people have the skills to do that, and fair play to them. Once you have an edge, I never recommend sitting still or sitting idly and resting on your laurels, because edges do erode with time, especially if your methodology is based on stale data. But my point is that when you are profitable, you end up playing a more defensive game. You shouldn't really be looking to take on any more risk or doing anything fancy. Your focus should just be to operate at scale. The secret to making more money is just time. Don't needlessly interrupt the process of compounding by dabbling in things you have no business in, not withdrawing and so on. If you adhere to the same principles day in, day out, month in, month out, year after year, the same ROI percentage will be magnified to numbers way beyond what you thought was possible. And there comes a point where diminishing highs set in. Making £1,000 early feels euphoric, but after you get to 50 to 100K, it just feels absolutely normal. And there also comes a point in your trading where the effort for that extra few percent of ROI does not match the reward for staking bigger amounts, which your bankroll will allow you to do. The freedom and opportunity to operate in several markets at the same time is now available at scale when you're in that 5 to 6 figure territory. In fact, you can then even diversify into asset classes which don't require any sort of physical management, namely Bitcoin or stock index funds. So your returns end up generating their own returns without you lifting a finger. And this is sort of the avenue that I went down. Diversification is a bit of a misunderstood concept because it's highly contextual. You have to be specialist in one area and scale up before even thinking about passive income later on. It's no good buying Bitcoin or gold with £50 of your £1,000 bank. Yes, you may get the same percentage return as me, but the monetary amount is going to be so pointless. You're better off focusing on the volume of trades you place. Once you've scaled to a certain point, how far you want to go is just a question of desire and repetition. The notion that traders with a 6 or 7 figure bankroll are that much better than a person with a 5-figure bankroll aren't necessarily accurate. At a certain point, everyone's ambitions and risk profiles differ. The biggest gamblers and traders have just mastered the psychological aspect of trading with bigger amounts, which is an episode in and of itself, which I'll probably do in the future. But hopefully I've given you some useful insights as to how the money game is played through whether it's trading or investing. The principles are the same. When you have no leverage and you're trading with scarce resources, every win is crucial, even though it's small. But when you operate at scale, typically after 10K, that's when the resources at your disposal allow your results to really soar in a fraction of the time. So I hope you enjoyed this episode. Leave your comments below. Let me know your thoughts. And if you feel like this will help anyone, please share. But at least make sure you're subscribed, like, comment, and I'll see you guys in the next episode.